They may call me the prophet, but in my life outside of the business of esports, I have worked on the investment side of the table for the better part of the last 2 decades. The single fastest growing area of gaming and esports is gambling. It's booming right now. You don't need to be a prophet like me to see that. However, as an investor, I've stayed away from gambling and betting companies because of the reputational risk and often shady nature of the companies involved. This was true until now. I've recently bought stock in a new public company called Esports Entertainment Group, or EEG, which is focused on esports and gambling. The big difference that changed my mind is that EEG is a public company, NASDAQ listed, and fully regulated, focused on esports betting. The regulatory and audit requirements of a public company are key in my mind to provide the needed transparency for players, bettors, and investors. I had an opportunity to host the CEO of EEG on this podcast a couple of months ago, and I was very impressed by his vision for the company. We've stayed in touch, and I'm delighted to announce that they've accepted to become a sponsor of the podcast. If you're a family office, institutional investor, or investor of any kind, really, Esports Entertainment Group, ticker symbol GAMBLE, GMBL, might be one of the best ways to get exposure to the esports betting space and gaming in general. Make sure to check them out at esportsentertainmentgroup.com. Having said that, I need to make sure to state that this is only my opinion. I'm not an investment advisor or selling stock in the company. Please make sure you do your own research and seek advice from a licensed professional if you're looking to invest in the field. From the keyboard to the boardroom, this is the Business of Esports podcast. I am Paul Dewalibi. I'm joined today by my friend and co-host, William Collis. For those of you who are new to the podcast, what we do here is we cover the most pressing gaming and esports topics of news of the week, but we look at all of it through a business and C-suite lens. We dissect, we analyze the business implications of everything happening in this industry. For our regular listeners, thank you guys for tuning in every week. Thank you for the 5-star ratings and reviews. We really appreciate it. Thank you for telling your friends about the podcast. If you haven't bought William's book, The Book of Esports, you got to go do that. Go on Amazon.com and buy it. Everyone's bought it by now, William. I'm going to have to stop saying it.
It's time to change the background, I think, Paul. For those who are watching the video, we're going to swap it out soon.
We're going to swap, yeah. I think you've sold all the books you can at this point.
I think we have a new background we like. We might be swapping too soon.
That's it. And look, we've got some really great news this week. It's kind of an exciting podcast, I would say. We have great guests. We have some great news. William, you're kind of in the middle of it. You're in this weird position this week.
Yeah, I am. I'm both.
You're guest and host again. I feel like this is the second time this has happened.
Yeah,
I feel like.
I think it is nice for our listeners because it shows, like a lot of times Paul and I speak, about the industry and comment on the industry. But I think the fact that we also make news in the industry speaks to us really being insiders and hopefully validates our perspective and our opinions a little bit.
I often say we're not journalists at the Business of Esports, right? We don't report the news. We comment on the news. We analyze the news, but a lot of times now we're making the news. So this is good. This is a good direction to be going in. And it's pretty exciting and somewhat incestuous, but it's great. But I kind of love it. And look, so let me just, before I intro the guests, because the guests are totally related to our top story this week. And I have to bring this up, William, because you're in it. So let me just introduce the story this week, and then I'm going to intro our guests, okay? And the guests are going to be familiar to you guys because they've both individually been on the podcast. In fact, on separate podcasts, which is kind of fun. But the story this week, the head story, our big headline this week, and this is from gamesindustry.biz, Esports Entertainment Group to acquire Helix Esports and ggCircuit. The subheadline here is, the deal will be worth $43 million. Esports Entertainment Group teases more near-term acquisitions. Now, for those of you who follow me on social media, on LinkedIn, on Twitter, I actually posted, I should put my post up because I took some time to write it and think it through. But I basically said that I felt this was one of the most important, if not the most important deal to happen this year in all of esports from a publicly traded company perspective. That we were not going to see a more significant, a more exciting deal this year than this. The coolest part about this is the people involved are all people I happen to know. One, William, my co-host and friend, obviously. But then the other two, Jeff Cohen, who's been on the podcast before, who is now, actually, Jeff, when the last time you were on the podcast, you were not in this role, correct?
That's correct.
But you are now head of IR at Esports Entertainment Group.
Yep.
And Grant Johnson, who, welcome to the podcast the second time. You are still the CEO of Esports Entertainment Group.
Nothing's changed for me.
Nothing's changed for you. But now you've got this really cool news that's out there. And we thought it would be fun to have both of you back on. So welcome to talk about it. And now it's kind of me that I get to talk with the three of you about this very cool news. So Grant, I thought maybe to start, our listeners know your background. They know Jeff's background. But maybe to start, just give them the overview of sort of what led to this acquisition. What was the thinking behind it? How did it come together? A little bit of the history before we dive into the specifics of sort of what it means for the industry.
Sure. I think that actually probably William and Jeff can do as well a job on this, because there was quite a bit of conversation that led up to this. As everybody who's followed your previous podcasts and followed our company, we've been made a point that we're going to be aggressive in the acquisition marketplace when the right opportunity comes up. And of course, leading up to this, we had just done a transaction for a tournament platform with EGL, and we acquired a technical company, a programming company, which was Flip, to make sure we had complete control of our entire tech stack for the online. But what had been missing was something that, the on the ground component that would tie it back in to a lot of the land-based operators, sports organizations, casinos. As everybody on this call knows, the casinos have been deeply involved with investigating how can they get esports into their casinos. And we've been thinking about the same thing ourselves. And then, of course, when I had reached out to Jeff, who, when he previously here, he was an analyst with an investment bank. And I reached out to Jeff, said, "Hey, Jeff, I'm looking to get somebody into IR and some strategy here with us. Do you know anybody?" Well, obviously we know who we knew, because Jeff's now here with us. Now, Jeff, when he was a rock star back in university, he was he won't tell you this, but it's a well-known fact at Harvard. He was the top leading scorer ever on their varsity lacrosse team. One of the people in this group over at Helix played with Jeff. And so when Jeff came over, he said, "Hey, I'm now over here." He'll tell the backstory. He brought to my attention, and it was like the light bulb went off, that this is the piece we've been missing for our strategy. So we have a completely vertically integrated esport offering from online because of our Vibe platform and our EGL platform. And with Helix, Genji, ggCircuit, we have the land-based side. And we can now, top to bottom, it opens up thousands of new potential clients, whole new verticals for us. As I said, the casinos, the sports arenas, major retailers trying to figure out how to get into the esport business. We now present the most logical partner, and it's I guess the best word for it is it's a transformative transaction for us. But it was Jeff actually that it was right after I was on your show. In fact, William went back and talked to his team at the same time that some members of his team were talking to Jeff. So
Grant, the whole point of asking this question was, what I really wanted to come back to is, it's truly the business of esports that somehow, without trying, put this all together by accident. That's it.
We might have to pay you guys a commission or something.
But for the listeners who maybe listened to the episode last time you were on, Grant, it would be good, I think, and those who didn't, to just a quick sort of reminder on, like, what is the business's strategy? What is EEG really trying to accomplish And then, maybe William and Jeff can talk to how each of the specific pieces that you bought here fit into that strategy.
Well, sure. I mean, the 30,000-foot strategy is to become, if not the dominant player, one of the dominant players in the esports sector. That's the grand plan. How to go about doing that? Well, our strategy is to, we have, and you've heard this presentation yourselves, so I will try not to bore anybody on the phone, but we have this 3-pillar approach to how we're going to do that. And on the one side, we have where we started, which is the online gambling. That's our VI platform. And that is for betting on esports events. Then we have the entertainment side, as in the name, Esports Entertainment Group. The entertainment is more on the tournament side and event side. So in that category, we have EGL. And most of the assets from this transaction fit into that category. And then the third strategy, or the third part of our approach, is the traditional iGaming. And the rationale behind the iGaming, because there's been a lot of blowback in the market. Well, these guys are just a gambling company and a traditional. What the purists who have a problem with that, what they're missing is the bigger picture. The traditional sports books have thousands, millions of people that are on sports books that also bet FIFA, 2K, Madden, NHL. They bet on the virtual game. We have the stats. We saw 55% of their handle when COVID shut down traditional sports. Those people wanted to bet. What did they bet on? Esports. So from that standpoint, it's a natural. It's not like sports fans and esports fans are genetically different material. They're both fans. They enjoy what they enjoy, and it's entertainment. The other element, and why we have that, is it's a more mature industry. There's more revenues there. And so that bolsters the financials, allows us to play the long game. And in addition to that, there's usually key strategic licenses, tier 1 licenses. We can then come full circle back around with VI and the other products and market esports directly back into those premium markets. That's our overall strategy. You can see the landscape is full of sort of one-trick ponies, I'll call them. They want to run tournaments, or they want to just do purist Dota, League of Legends, Counter-Strike, Rocket League, and they're leaving 80-90% of the marketplace unaddressed. The person who likes to watch and play FIFA is just as important to us as the person who likes to watch and play League.
Yep.
So they need a product. We have them both sides covered.
This has always been my criticism a little bit of the industry, especially, my target's always been teams. They bear the brunt of my criticism often. And often, the form that criticism takes is they are one-trick ponies, to use your terminology, right? Like they field an esports team and they expect to collect tournament winnings and brand sponsorship. And it feels very very one-dimensional. When what I really loved about this transaction, which seems very rare in the esports industry today, is a kind of diversification, but where all the pieces make sense together. Like there's true connection and synergy between all the pieces, right? You can get people into the centers to bet. You can bring traditional gamblers to do esports betting. You can get, right? Like all the pieces seem to fit together. The one we haven't talked about, William, is your piece here, is Genji.
Yeah. That's
I'm sorry to my friend that it's a little bit of the footnote in the announcement, but it's no less important, I'm sure, right? Yeah. How does it fit into the big picture here? Like where are the synergies extracted with Genji? Because I think most people always saw you as the team owner, but there really was another business here that had so much more.
Yeah, so just to be very clear, there is a team side to what I do in the industry, Oxygen, that's still going strong, but there was also a very significant data play that I had been building with a phenomenal team of people, Paul Gavin, Joe Saban, et cetera, over the last couple of years in Esports Analytics. And, naturally, we saw synergies between that and a physical deployment model like Helix was building with centers. Because we realized that you had an unprecedented data source coming from the centers. You literally had perfect information about what people were doing, how they were consuming, right down to the peripherals and bandwidth that they had access to. So we saw that as having an enormous piece of value. And so Genji kind of combined with Helix earlier this year, which is hence why the headline is Helix, because we're now part of that Helix group and rolled into the acquisition set that way. But yeah, we're extremely excited because, personally, I believe, okay, so all those synergies we saw with that data sourcing is now substantially amplified, right? Because part of this acquisition is ggCircuit, which essentially takes software that we had built for LAN centers and puts it into basically every LAN center in the United States as a distribution platform. So that's incredibly synergistic. And you're getting all this great pristine data out of games. We're experts at analyzing it for talent, efficiency, win rates. Well, what does that feed into? Well, that sounds like a great use of data in any sport is the wagering side. And so now we have a natural marriage with the wagering and the platform groups there with the EEG label, as well as the EEG resources to scale out that way. So, the way I think of Genji in this acquisition is we're kind of the connective tissue. We're like the synergy or the glue that helps to realize value from the independent pieces and start to bring them together. But I mean, obviously I'm excited because I think it's a phenomenally strategic deal. And I think the best part of it is what Grant said, is that the industry, this is an industry that's getting characterized by scale, right? The more things you can efficiently combine, the better, because it is an industry that is a bit chaotic. It is an industry that is early. And so scale is the bulwark against those tides, right? And now you have, I think it said in the announcement, like, this is the largest diversified esports play, right? Mm-hmm. Like, there's real scale here now, and scale across valuable industries that reach all the way from communities and individual centers that touch gamers one-on-one at their local tournament or their first play ever of Fortnite, right? All the way up to now, what I would say is the icing on the cake and maybe the heart of the fire, which is the wagering markets, which we all know are going to be huge for esports. We all know that's going to be a massive monetization tidal wave that is just starting to surge right now. And now you actually have a foundation to surf in on that tide, basically. To continue my incredible aquatic metaphor for as long as I could.
I mean, William, kind of the funny piece is, and you, I hope you'll confirm that this is a true story. One of the first things I told you when we met was, especially with Genji, the data play, the data piece was, you should be going and selling yourself to every esports betting company on the planet because there was just such obvious synergy there, right? In the end, I was right. You ended up doing that.
The difference was we fell in love, Paul. Rather than sell to everybody on the block, we got married to the perfect.
This is true, but I do think this is a really distinct advantage in what will be, potentially like esports in my mind, and we'll talk about this in a few minutes, will far surpass traditional sports betting. And so if you think sports betting is an exciting, area right now, esports betting, I think, is going to be that much bigger.
Paul, if I could just say one thing, I think one of the reasons that's particularly important is because that has the potential to really be a competitive advantage for us in the future as we see some of the bigger, more traditional sports books like the DraftKings, the FanDuels of the world. They're going to have competing offerings for, the big three. But what, hopefully with Genji we can have is more lines, maybe on more, tier 2 leagues, and some more esoteric lines that the DraftKings of the world probably won't have, at least at first. So I think that is particularly important from a synergy perspective.
It's scale, diversification, distribution. It's all in the deal here, right? Because, remember, too, having the LAN centers is a valuable point to look at deploying these wagering products. Because I do think there are risks today in the market, too, around adoption and attrition that you can address with these wholly owned Helix properties, beyond the fact that they're just very good standalone businesses, right?
Jeff, I'm curious to get your perspective on EEG relative to your peers, call it, in the public markets, right? I think, again, where I see clear differences is we've talked about it now, this strategy of synergy and differentiation, right? Having multiple pieces that all work together. Also, like on the betting side, you guys are completely regulated. Obviously, being NASDAQ listed holds you to a higher standard. But when you look at just your public comparables, like the Super League Gaming of the world, right? The other publicly listed pure play esports companies, where do you think you guys stand out? Like how do you look at that world from a competitive standpoint, and where do you put yourselves sort of in that world?
Yeah, so I think the difference with us is kind of all the things we've hit on already: the diversification, kind of the broad exposure, the infrastructure, really. So I think that those are really important things to highlight. One of the things I found when I was an analyst covering the space, there wasn't really a great pure play way to play esports. I think when I was on the podcast last time, we probably spent 95% of the time talking about publishers, where publishers make their money really through selling games, selling microtransactions. They're not really, they're creating the balls, if you will, for the, in the analogy of esports, but they're not actually, making their profits off of esports. It's kind of more of a marketing item for them. So I think with EEG, we give investors kind of that broad exposure way to play, this trend.
And like if you had to point at a super league specifically, because I like to poke fun at them because I think they are a bit of a one-trick pony, and it's never clear to me what their strategy is. But like, and I know you can't say that or wouldn't want to say that, but like, just in the mind of an investor who's looking at the space and who's looking to place a bet, what is the messaging sort of from you guys relative to a super league? Because super league puts out a lot of press releases. Yeah. We're doing this tournament, we're doing that tournament.
I think the problem that super league has had is they've amassed a pretty sizable digital audience, but they haven't really figured out a way to monetize it yet. I think the important thing here, all these assets we're buying produce revenue. They are monetizing already. So we're not buying a network that we're gonna have to figure out how to monetize. And with gambling, our core platform with IBD, I mean, we know that gambling monetizes. There's a 50-year track record of casinos making money. So I don't think we have to worry about the monetization aspect. So I do think that's an important distinction. I don't know, Grant, you might have stuff to add there.
Yeah, I'm curious, Grant. What's your take on it?
Yeah. Well, every transaction we do, every move we make, particularly this one, it is a focus on what is the ROI, what's the value to the investor. I mean, there's a lot of esports offerings out there that are really cool. I mean, they've got a really neat name and they do really well in the tournaments, or they've got a cool platform. And, this is going to come off wrong, I know, with some of your audience, but just getting tracking on social media, it can be great if you have an end game. Where are you taking that? For us, it's all about what's the return for our investors. I look at, when William was talking, he was definitely focused on why Genji was developed. But for me, I sit here and think, okay, scouting reports, every team in the league wants to buy these things. That helps build the ecosystem, but that's a fungible product. The analytics, the data, I mean, everything in the world runs on data now. What can we do with that data? Tighter lines. There's not a casino and sports book on the planet that has had these same consternations. The reason they're not rushing esports in is the integrity of the data. And here's a situation where Genji, that's another fungible product that could be sold to sports books and casinos around the globe. So I kind of come at this from a bit of a different angle. How can we monetize that product to the benefit of the shareholders? Every symbol you see behind me, every one of those companies plays a role in that objective. And you won't ever see us going to get a TikTok site, not because millions of people don't watch it, but I don't know what I would do with it.
Great. What's the message to casinos? Because you've mentioned casinos a few times, right? And I think there's a really particularly interesting kind of one, turnkey solution that you guys can provide there because of all the pieces you have. Maybe you can talk to that a bit, because I do think, there's a subset of the esports audience that also touches gaming in the casino sense, like betting, and casinos, while they're doing well as businesses for the most part, they struggle, right? And they're a bit stuck in the past. Everyone knows the younger age groups don't like playing slot machines, right? What is that kind of solution that you guys bring to the table? Because it was mentioned in the article for casinos specifically.
Sure. Well, I'll share a story first and then get into the facts of it. I called one of the groups we've been working with in casinos, and I said, I've got a solution for your esports problem. He goes, "What's my esports problem?" I go, "You don't have any."
that is a problem. Yes.
So the really, multiple parts of this, are a solution for them. Number one, how to get in touch with that audience, that the millennials, the Gen X, they're not coming. and they're not coming for exactly, they don't have anything in the casinos they're interested in. When they host an event, they come in, they watch the event, and then they leave. The casinos sort of thought it'd be a bait and switch. They'd come out of the game and they'd go to the slots or the craps table. They don't, clearly. And we could point to a very obvious example of that I don't want to besmirch anybody on the particular call here. But what we have is, we've got the online component. So we can attract people online through social media, through all the marketing, and start directing them into an event that's going to culminate in the casino. When they get into the casino, we've got the combination of the Helix ggCircuit Genji part of the solution. They come into the casino. There's an esports dedicated section of the casino where they can sit, they can play against each other, they can bet against each other. The land duel casinos are all about gambling. It's there. They can go to the sports book lounge. Now there's esports lines up there. Not just on the top title in each particular not top championship in each particular title, but an array of championships, the university, the college games, the Overwatch League, etc. We can now get those in there. And it all runs, the base of that, the technology runs off the ggCircuit. There is no other company out there that can come into a casino, a partner, and offer that solution. They'd have to go to 3 or 4 different companies to piecemeal that together. And you know yourself, Franken solutions never work. There's always a problem with them.
So you see a future where we walk into, the Bellagio, and instead of, 1,000 slot machines, there's an entire esports section where people can bet on esports, play against each other for money. Like, you think this will become commonplace pieces of the casino sort of floor?
I think every casino that's trying to attract the 35 and under crowd will absolutely have an esports offering. And I would think that's every casino that plans to stay in business.
Interesting.
Yeah, and I'd strengthen that even more, because you have to remember, kids age up. The 35-year-olds today are 55 in 20 years. It's a certain group of casinos right now. It's every casino very quickly, right?
Yes,
and I also think it's in the DNA of esports players as well, because the thing that I think we miss a lot when we compare esports to traditional sports is the view versus participate, right? Plenty of people view traditional sports, but the participation rate is just not. Most of the people who watch football aren't going out after a game and playing football, right? But most of the people who watch, say, League of Legends or Rainbow Six Siege are playing Rainbow Six Siege or League of Legends before, after the games, the next day. And so it's a deeper wagering market as well that's much more engaged, because it's not just betting on others, it's also staking yourself, which I think is arguably maybe the more compelling missing piece that sometimes gets left out of this. So yeah, it's just a great opportunity. And the last thing I'm going to repeat exactly what Grant said, but I think it really bears underscoring. It's a piece that sold me on the deal, is the revenue piece of this, right? It really is esports is, as an industry, we are great at engagement. We can get you a ton of people looking at something. We aren't good at everything else that comes after the marketing funnel. And the story that's often told in esports is, well, the top of the funnel is so big, it must shake out at the bottom. But many times in many industries, that is not proven true. And I think what's very unique about this business in the esports offering is the base of the funnel, the underlying revenues that drive the businesses are there. And the underlying industry is known to be a good, profitable industry with favorable dynamics, right? So I don't know, I think that's very compelling, and I want to stress that.
Guys, I want to put up an article here totally related to this transaction. And it came out last week too, or this week, in fact. And it's from gamblinginsider.com. And the headline, it's a big one, and maybe even controversial these days. And this is from the Luckbox CEO. He says, esports betting will overtake traditional sports betting in my lifetime. I'm not sure how old he is, but I'm guessing it's on the order of, 20 to 30 years, maybe 40 years. I don't want to suppose his age here. But William, I'm curious, as the professor here, right, who's looked at this industry, every single way, how sensational is this headline truly in your mind?
I don't think it's sensational at all. I mean, look, and I'm not trying to look. Obviously, I'm a believer in this, but this will overtake it. It's not, it's like, it's a certainty, right? Because you just have to look at the demographics, the engagement, the trend that the world, I mean, look, more people are watching the League of Legends finals than the Super Bowl, right? Like, and the League of Legends finals are getting 23% viewership engagement year on year. Super Bowl is flat to maybe 2 or 3% left. Like, just look at the numbers around what we're doing. And like I said, the other piece is sports industry betting is all about betting on others. The esports industry also encompasses betting on yourself, which is a massive element that's often forgotten and totally incremental to the core sports wagering market, right? So, you know, and even when I was doing market sizing, right, like I published this paper recently in IGE, which was sizing the total size of the esports industry. And there was one component we didn't size in that paper, and it was sports and wagering. And the reason is that component looked like it was so big that we were like, well, this probably needs to be another paper because it's going to totally swallow our messaging about the core publisher revenue sides, right? So it's big. The difference is it hasn't been able to be visible in the same way that traditional wagering is, both because of the embryonic nature of the esports industry, the lack of regulation, certainty, right? It's pushed it to this gray market on the edges, so we're not used to seeing it. Like, everybody's used to seeing DraftKings on their phone. We're not really used to seeing esports wagering front and center. But that's changing now, and that's changing very quickly.
Well, I mean, one of the things the article actually says is already, if you look at 18 to 25-year-olds, they're spending more money on esports betting than they are on traditional sports betting. So the demographics are definitely in your favor, right? Like, it's just moving that way. I mean, for you, Grant, I'm curious. I know one of the pieces of the company's strategy, obviously, is the esports betting piece, like we just talked about. I know you guys plan on playing both in like the real money wagering, obviously through Vi, the player versus player, and in the fantasy betting space, right? Like, I think the plan is to attack all three, correct?
That's correct. When we launch, like, we're reworking the Vi platform to be ready for New Jersey in Q1. So that'll be our first offering in the US. And that will, everything, the categories you just addressed, it's specifically going to have, you know, the in-game, the micro betting, the player versus player, the fantasy. So we're going to have that wide array because, you know, betting, and a lot of people don't look at it the same way, but it is entertainment. And if you're going to have a product, you need a wide product offering. When somebody comes in to maybe place a bet, you don't know the kind of bet they're going to want. Do they want to bet in pools, fantasy? They want house betting, player versus player. So we've got to have that broad spectrum of the offering as you just laid out. And this is actually really, you know, where the land duel piece gets exciting as well, because with the Jersey license, it now opens up the door to have these conversations and with physical locations in the state of New Jersey, where it's already, you know, Williams advised us that they're well down the road of testing the product in conjunction with the Gaming Commission there already, which is, as you know, one of the most proactive, if not the most proactive commission in the states. And, you know, Nevada and Jersey, basically, they're the front runners on all new developments wagering wise. And they're definitely, this is the right state for us to roll the product out, both products out.
But how do you respond to someone who says, okay, you guys want to be leaders in esports betting, right? We all agree esports betting is the future. It's going to surpass traditional sports betting, right? Like, this is where everyone wants to be. And then go and buy, as part of your strategy, you know, traditional casinos. Like, how do you reconcile those two? Is part of the view that eventually all those customers become esports betting customers, or many of them, you transition into it? Is it something else? Like, how would you respond to that kind of?
It's really it's a simple response. I mean, with the sports book, and we're not playing physical casinos.
Yeah, sorry. To be clear.
Yes, for clarity. You know, we've got a fairly decent bank account, but not that size.
Not buying the Bellagio. You heard it here first.
You know, Steve Wynn does not return my calls.
Yeah.
So the iGaming operators on the sportsbook side, as discussed earlier, there is a heck of a lot of crossover between the fans of, you know, Premiership and FIFA and people who watch NBA and NBA 2K. We've got that. That's a factual statement. We've seen it because we've got a sportsbook. So there's definitely some crossover there. The second piece is they're more established. It's a more established business. You know, the iGaming operators, and I hate to admit this, but I was there when they started in 1995, when they started going online. As a matter of fact, the company I worked for took the first credit card transaction in Canadian e-commerce history in online gambling. So it took some time to get that business going, but now it's a mature industry. It's 25 years in, and those operators are well established. They have cash flow, they have profit, they have players, and they have licenses. So if you want to get into the UK, you can go through the licensing process, 6 months, maybe a year, a couple £100,000 or, and then you're starting from ground zero, or you acquire an established operator that already has the license, has players, has the revenues. And see, I don't see the disconnect. I know a lot of people, and I read some of the Reddit posts, so I'm well aware that how the Reddit key warriors view whenever you touch anything traditional gambling, it's like it's sacrilegious as far as they're concerned. But I don't see it that way. I see this is an opportunity to pad up our financials, because what feeds our business model is our public company and our access to the market. The market loves esports, but it also loves profits and revenues. And those two don't need to be mutually exclusive to each other. You can have profits and revenue and still pursue aggressively the esports. So it's going to be a huge chunk of the engine that drives the machine forward. So we play the long game. At the same time, there's a hell of a lot of synergies, the licenses, the players, the deposits, that we then go circle back and market esports back into. If we buy a casino in Germany, that opens the door for us to then market esports in Germany, the fourth biggest economy in the world. Why wouldn't we want to have esports there?
Yep.
So that's the rationale behind it.
Look, I asked the question because I saw similar comments, right? And the Reddit is such a
hey, if you're ever feeling good about yourself, you need to be taken down a notch. Go read about yourself on Reddit. That'll take the wind out of yourself.
Every so often we post these podcasts on Reddit, and I'm always terrified, but I always want to get into it, right? I'm like, all right, so let's go. You want to say something, and so when I saw those comments, I did want to get into it, because the one thing that I think people miss, and DraftKings and all these guys get so much attention, but if you read some of the articles, like where they struggle the most, the biggest by far, like stumbling block in terms of their growth is the cost of customer acquisition, right? And my view is by buying the sports books the way you are and transitioning those customers, or at least cross-promoting the esports stuff, like you've essentially reduced the cost of customer acquisition to basically nothing on the esports side, right? Yeah. That's how I saw it.
One thing I would say there, Paul, is we view our tournament platform that way too. So we're rolling out the tournament platform in conjunction with a lot of traditional sports teams here in the U.S. People listening to the podcast probably saw us announce deal with AEG, owners of the LA Kings, LA Galaxy. We have a number of other teams that we're in communication with as well. And they're going to be going out and marketing our tournament platform to their millions and millions of fans. That's going to do two things for us. One, that's going to give us a low customer acquisition CAC channel. And then also it's going to tell us where we're having the most success finding players. And that's going to kind of give us analytics around where we want to go after in the U.S. Once we're in New Jersey, what other states do we want to go after? Where do we have the most players? So I think that it's almost analogous to how DraftKings has done it with daily fantasy, and that's given them a huge advantage. We view our tournament platform very similarly, in the esports market, actually.
Cool. One last thing, guys. In the article, it says that you teased near-term acquisitions. Now, I know as a public company, you can't reveal on this podcast as much as I'd like to try and get it out of you guys.
We're actually buying the business of esports.
You heard it here first, guys.
How much do you want?
I mean, you paid $43 million for all the others, so I'll take 50 if you guys want to do a deal right now.
Paul likes to say, as long as he sells for $1 million more than me.
Whatever William's getting, I got to get more.
That's his benchmark that he uses.
No, but seriously, you tease these. I know you can't talk about them specifically, but is there anything you could tease, to our listeners that might be exciting, might be, what to look out for? Because there's a lot of people who listen to this podcast because they want to follow the industry, right? They want to know what's going on. Where should they be looking in terms of where you guys are looking? I don't know, maybe in that kind of context.
Well, I'm certainly not going to give our blueprint away.
I understand that. I don't blame you, Grant.
But we have. I think, and I had this conversation today with an analyst, and Jeff was on the phone with me. I find it surprising that everybody's surprising that we're doing exactly what we said we do when we listed. I guess integrity and honesty is a new thing. We said we were going to be aggressive in the M&A space. We had some things we needed to take off first, which was concluding the Argo acquisition done, getting the Malta license done, getting control of our tech platform done, launching the skill-based platform done, and then we were going to get into more M&A work. Well, clearly, this is the biggest by far transaction, and it's multiple companies involved. But it's not the only discussion we've been having. Of course, we have an M&A team that's led up by Stuart Tilley, who was the former CEO over at Argyle, and he's our head chief legal officer. And Dan Marks, Jeff is one of the members of that team as a former gaming analyst, and Adrian Lefebvre, who's a chief compliance officer. And their job is working with the Occur team to suss out quality acquisitions that fit. They're accretive. And all I can really say about that is they're the number one consulting firm in the UK, which is probably one of the most prolific industries and definitely leading jurisdictions in the iGaming space. They've been very active with us for many months, and we have multiple conversations at very advanced levels. That's as far as I can take the conversation.
Okay, let me then ask something a bit more specific, because you joked about buying the business of esports, but does content play into the strategy at all? Is it something you're looking at? Is it something that maybe doesn't? I'm curious how you see that piece of the puzzle fitting potentially, and you could talk maybe today or down the road, right? That might be two different views.
Well, content for esports is, to William's point, even more important than it is in traditional sports. I mean, esports fans are voracious consumers of information and completely unsatisfied unless there's something new constantly. We have, again, with Magnus from former DreamHack exec, he is constantly on the lookout for other esports specific and content specific opportunities. And there's no his phone, like William's phone lately, I'm sure, and certainly Jeff's and mine, has been ringing off the hook with, "Hey, I got something that you want to talk about." But yeah, Vi, as you see up here, the Vi Esports, the blue logo, that has been, that's a site that was originally set up for content. We do have a staff writer, but because of the amount, as William knows, the amount of information, constantly evolving information in esports, we're on the hunt for always on the hunt for new content, interesting content.
So it is part of the strategy. It's not
definitely
because it obviously fits in that entertainment pillar, that right?
Yeah,
that
we've even got the site set up for it. We just, we're telegraphing a little bit here,
guys. Before we move on, because we'll do one or two news stories this week. Obviously, it's great to have Grant and Jeff who know obviously a lot about the industry to talk about what's in the news. But before we move on, anything that our listeners, some who may be individual investors, some maybe family offices, like anything that you'd want to either, what kind of messaging would you want to leave for them? How can they reach you guys if they're interested in sort of knowing more? Like what's the message to them? This is your opportunity to shill this, if you want, to plug it. Shill is not a good word. To plug it, right?
Sounds unsavory.
No, it's not. Obviously not. But maybe Jeff, on your part, should they be reaching out to you?
Yeah, I mean, you can reach out to me. You can reach out to Grant. I'm at Jeff at esportsentertainmentgroup.com. Get in touch. Happy to talk to anyone. Whether you're an institutional investor or just someone who's a fan of the podcast who looks at the space and wants to chat. Happy to talk to anyone. I think our stock is a super interesting story right now, definitely undervalued, relative to peers. And we've got, this and other exciting things coming down the pike. So, I'm personally super excited about it. So would love to talk to anyone who's looking to learn more.
Look, our listeners know.
Actually,
sorry, go ahead, Greg.
I was going to say, Paul, there's a simpler address, just IR at Esports Entertainment. We'll also go to Jeff.
Cool.
Not that Jeff's a difficult name to spell. But
look, and our listeners can reach out to me direct. Everyone I think who listens knows how to reach out to me.
The generic, IR address.
Yeah. But I was gonna say, guys, like I've been so incredibly critical of like the pure play esports companies in the space. Like really, if anyone has listened to all 102 episodes of this podcast, right, there's a consistent theme where I'm not a fan of the strategy. I don't understand kind of the one trick pony approach. Like I really truly believe in what you guys are doing. I really love the acquisition here. Like, again, to me, this deal was genius. It's accretive. It creates synergies. Like look, I hate to fanboy, but it's, look, if I'm being honest with myself and putting my business investor glasses on, right, I think this is the smartest acquisition that's happened in the space in a very long time. So sorry to pump you guys up. I don't know, but no, I'm a big fan. So
I would say, look at it like this, Paul. I mean, because you have a background, obviously, in the finance business. What we're putting together is like a fund, a diversified portfolio of companies. It's not a one-trick pony. We've got a diversified approach going deep in the sector. And if you love esports, you play esports, you watch esports, you're a fan, you don't have a lot of options. You've got as you say, the one-trick pony, or you can try and get in on a publisher, or you can go buy and start a team. As William would tell you, that's an expensive proposition and takes a lot of time. And there's the billionaires it's moving in
fraught
heavy.
With risk is what I would say.
As I say, you're competing against all the major sports teams, which are already doing the same thing, poaching the top talent. So it's a long game if you want to do that. If you like it and you're a fan of it, look at the companies that are involved here. I mean, there is no other company that you can invest in that has that many.
Grant,
shoots into the sector.
Like I said, our listeners know. Like I am not afraid to speak my mind. I am not afraid to tear into Super League. Like there's nothing that ever really stops me. Right? There's no fear on my part. And but I can't on this one. Like the business lesson here, and we try and always tie in some kind of business lesson for our listeners. One of the things you look at as an investor in public companies when they're making acquisitions, you ask two questions, right? Is this accretive, right? Does it create value that didn't exist before? And is it synergistic with what the rest of the business is doing? And if you can check those two boxes, to me, you've got a winner, right? Like that, then that acquisition makes sense. And it's hard to go through the list of companies you bought here and not be able to check those two boxes. So, I mean, congratulations to the three of you. I'm kind of super jealous, but it's really a huge deal, and I'm super happy that to me this is no doubt a success for the long term. So, congratulations to all of you. Let's move on, guys. Let's talk about some news, if that's okay. And I feel like. By the way, the story I didn't bring up, sorry to come back to this, was I saw this other one, which I feel like you guys should have written, which you did, right? It was about your announcement. But I just love that the headline was so spot on, right? Whoever wrote this headline, this Zev Fima from the street, like clearly understood what you guys are trying to do. Yeah. Like to me, this was a really kind of genius headline.
By the way, Grant, thanks for inviting me on the street. I just have to say for that appearance. Paul loves the fearless leader over there. So
Jim Cramer, are you kidding me?
Yeah.
I want to be the Jim Cramer of esports is the goal here.
But like, we're gonna start wearing Eagles shirts when we go on broadcast.
Is that the trick?
Well, but it works for him.
but quite seriously, if you look at the slot machine space, because you look at LAN centers, they look very conceptually similar. The difference is just the age of the person using the playing, right? Which it turns out, is the exact age demographic everybody wants to get into the casino space. So yeah. I agree. I think it's a great headline, but I don't think it's a will. Like it is happening. Like if you want to explain why people aren't going to casinos who are younger, it's because of games. There's no doubt in my mind that's a principal driving factor.
So guys, let's talk about a story that's kind of related in the sense that it's another interesting kind of investment here. This one's happening across the pond. It's the headlines from gamasutra.com, and the headline is Tencent leads $100 million investment into Chinese esports company VSPN. And it goes on to say, so they've invested in this Versus programming network. It's a Chinese esports company. It's a Series B round. It's backed by other investors, led by Tencent, but has a few other investors. And what they say is VSPN provides game companies with turnkey solutions to create innovative online and offline events while also creating esports content. So, in some ways, they're going down these two paths which you guys already do, basically. I'm curious, William, let's start with you. What you make of this? What you make of this investment? It's a big number. It's $100 million. Obviously, very high. Very high valuation. Does this not kind of reinforce the conversation we just had, which is, they have just two of the pieces EEG has, right? It makes Esports Entertainment Group look like a real bargain here, if you ask me.
You said it. That's exactly right. Like I think the thing that people miss is, particularly in the gaming ecosystem, the integration. Like integration across solutions providers is always hard. It's just very hard, right? It is exceptionally hard in esports because of the chaotic nature of even down to something as simple as like a game patch. Like if you have a game patch and you're dealing with one solutions provider, that is one source that has to update and change to adjust. If you're trying to get 7 businesses to integrate together to deliver something and there's a game patch, one of them is not going to have it ready, which breaks the whole chain, right? So yeah, again, it goes back to scale diversification. This is a huge round. $100 million is very notable. Tencent,
you have to think the business is valued probably here at least 300 million. You have to believe somewhere in that ballpark.
You've got to believe 3 to 5 for that pricing. Plus, it's Tencent, which is and I think they're the best bellwether of where the industry is blowing, because they were in publishers before publishers were big. They were in streaming platforms before as streaming platforms were becoming big, right? They recognize the diversification of asset classes in the industry. Like why Tencent has done so well is not that they put all their money in one company, Riot, and it rocked. It's that they put their money in lots of companies and the vast majority of them performed. So this is a very good reinforcement of the strategy we outlined. The difference is just, there are more pieces under the EEG umbrella, right?
The guy from Tencent is quoted here. He says he was keen to back their long-term vision. And I'm not sure if the translation's great here, but it says to help optimize the layout of the esports industry's development. I'm not sure what you make of that, Grant or Jeff. It's not 100% clear to me.
I'm lost in translation.
But you guys have that offline and online kind of tournament piece. You have the content piece. Can we? Is it so easy to say EEG should be worth at least $500 million today as a consequence? There's a clear comparable here. Jeff, I don't know how you feel about that.
Well, I think it's always hard to compare, private valuations and public valuations. But I think, like we laid out before, we have guidance for 40 million plus in revenue in our next full year. So I don't think it would be a stretch for us to be valued, 4 or 5 times that, which, would get you into that 200 million weight class. But that's, obviously just my opinion, looking at comparables, kind of putting my prior analyst hat on. Obviously the market kind of has valued us as they value us currently. But yeah, maybe Tencent should call us. Sure. We'd be able to
one of the themes of the podcast, honestly, guys, and Grant, I'd love for you to talk to this, is William and I have said many times, we think Tencent are some of the smartest investors in the space, like by far, right? They seem to be one step ahead of everybody all the time. and they've made some great investments. And while the valuations are high, they always seem to realize value out of it. I'm curious, how much of the Tencent strategy here does EEG look at and go, we're doing the same. We can do that too, right? Because they've been doing it for a while. I'm just curious what you think of their overall strategy and how it compares to what you guys are executing on.
Clearly, it's been successful. I mean, they're the giant gorilla in the game. They have the big. It's just really an issue of scale. I mean, if we had their wallet, would we be doing bigger things faster? Well, of course we would.
Yeah,
we have to be a little more strategic. We can't afford to make a $20 million mistake, and nor do we have 5 years to get that $20 million back. We try and take an 18-month view on ROI when we do these things. So we've got to take more bite-sized pieces that we can, they're creative in a shorter period of time. But yeah, I agree completely. We have a very similar strategy and a couple of extra pieces. We've got the gambling element, which there's no doubt that the Chinese love gambling. The Chinese government doesn't like the Chinese people to be gambling because they're all over Macau gambling themselves. There's a little bit of hypocrisy in it because Macau is Asia's Vegas, of course, and it's all Chinese, 100%. And I would imagine most of the owners there are members of the party. That said, clearly Tencent is a well-run company. They're well-financed, and the moves they make, you can't fault them. So, to your point, should we be valued higher? I'm not even going to give you an unbiased.
Your opinion may be somewhat biased here.
Well, we can also draw another story, though. Just 2 weeks ago, G-Loot got a big financing on a $200 million valuation on $4 million in gross revenues, but only $400,000 in net gaming.
And all they do is player versus player, right?
Well, it's a tournament platform, but if you're looking at that, currently our valuation is 1/4 theirs, and we do 5 times the revenue. So you tell me if we're undervalued.
It's this weird kind of and part of the problem too is I think you guys are unique in the public markets, right? Up until now, the companies have sort of been lackluster, right? And so have suffered from somewhat low valuations. The problem is you guys are new, right? Newish, and you're doing something totally different. I think it takes the markets a little bit of time and understanding to go, wait a second, these EEG guys are doing something radically different here. This is not Super League. This is not right.
I also think diversification strategies tend to be just a little harder to message and understand, particularly in fresher industries, right? Like,
it's true.
If the example I would give is if all you were going to do was make baseball caps, right? It's a pretty easy story to tell. Right, you're like, well, people who like baseball like it. Maybe people who are scared of the sun, right? Come on, But if you're a diversified apparel company manufacturing jeans, bathrobes, sneakers, it's a better market, but it's a much harder story to tell because you have to justify the pieces. You have to explain, well, no, the same people who are buying baseball caps probably also want jeans. And I think in general, we're at a level in the market education space today where it's almost the onus is a little bit on the people investing as they come up the education curve to appreciate the more complex businesses, right? And that's a bit of a cop-out. It's always but I do definitely think it's true that the reality is up until 2 years ago, just saying esports was enough. It didn't even matter what else you did, right? Now we're at a point where you have to have a vertical within esports. I think we're at or very close to a point where people actually understand the nuance of, okay, no, it's not just the vertical, but it's the operating model and the de-risking that you have on that venture and the breadth of that venture that matters. So I think we're getting there, but I think it's a more complex story to sell. Look at the logos behind Grant, right? There's 10 logos there, right? Those 10 companies are all doing great things, but that is a 10 times more complicated story to ingest, I think.
Well, that's a good point. I was on a podcast the other day, and people were asking me, what was our KPI? Well, which one of these companies you want to talk about? Because they all have different ones. What's our ROI? Well, which one do you want to talk about? You want to talk about ggCircuit, Helix, Sports Nation? The only one that was easy to eliminate was Flip because it's not.
But I also think that's just the wrong way of looking
obvious
at it.
Behind the scenes. But yeah, it is a difficult story to get the message, clearly in a small soundbite.
I also think it's the wrong way of looking at it, right? To me, that person asked a question that it doesn't really matter what the answer there is, right? The bigger question is, how do these pieces work together, right? Mm-hmm. And do they work together, and do they make sense together? Not how each individual piece operates on its own.
And that's what I wanted to add is, I think now with this acquisition, as it is, because Grant's used the word transformative, there are more through lines in the business that create a more focused common story, right? Because the assets line up a little more clearly. And I'm not saying it means the assets before didn't have strong structural value together. They absolutely did. But now more of the dots are connected in the dot illustration. So it's easy to stop talking about the individual dots and start talking about the shape that you're drawing, right? Again, wow, I am just on these tear with these.
Well, I don't know what's with you. Did you go swimming earlier?
I know, what happened to me? But I think that's exciting, and I think better. I think stronger messaging as a result of this is a go forward takeaway from the entities.
Guys, look, that wraps up this week's podcast. Grant and Jeff, thank you as always. You are now in the very elite group of 2-time guests on the podcast. It's a very small group, but I think some of our favorite guests make it there. Congratulations again on the transaction. I think for all of our listeners, hopefully this was a really interesting look into what I think is going to be or go down as the most important transaction this year. William, of course, as my friend, I have to congratulate you directly.
Well, Paul, I mean, I have to congratulate.
First, you have this book. You do this without me. Then you sell your company without me. I don't know. Something's going on.
He's a bit like Eddie Murphy on Saturday Night Live. He's a hosting and a cast member.
That's it. I wouldn't mind, I feel like he has me doing all the work on the podcast so he can go build companies, I
don't know, Paul. I think we've done pretty well together. But we'll see. But
I'm feeling a little bit like your Lucky Charm, no offense.
I'm feeling a little bit the same way, to be honest with you. But
on that note, guys, for our regular listeners, thank you guys for tuning in every week. Thank you for all the 5-star ratings and reviews. Make sure you check out every Wednesday evening. We do a live stream at 8:30. It's all the stuff that doesn't make it on the podcast, and we try and have fun with it. It's a little more interactive. It's a lot more interactive. We get to chat with you guys. We get to answer questions. We get to cover topics that you want to talk about. Every Wednesday evening at 8:30 Eastern time, we do that live stream, and it's a lot of fun. Thank you guys again, Grant, Jeff, William. It was such a blast. I'm sure we're going to be talking about the next acquisition at some point, which we still can't tell our listeners about. One last try.
Pretty sure. Okay. I'm allergic to jail.
Okay. But definitely go check out esportsentertainmentgroup.com, guys. It's definitely worth a look. On that note, thank you guys as always, and we will see you next week.